Breaking news from Wall Street: Nvidia, the AI chip giant that turned early believers into millionaires, is now sitting in the crosshairs of some serious market anxiety, and every investor watching this space needs to pay close attention right now. Here's what's happening. OpenAI, the company behind ChatGPT and arguably the most powerful symbol of the artificial intelligence revolution, has triggered fresh concerns about the pace of its growth trajectory. And when OpenAI sneezes, the entire AI chip ecosystem catches a cold, and nobody feels that chill harder than Nvidia. Nvidia shares have come under significant pressure as traders and analysts reassess what slowing momentum at the world's most prominent AI company actually means for the semiconductor king sitting at the top of the food chain. Let's break this down fast because the details here are absolutely critical. Nvidia built its dominance on one undeniable reality: every major AI company, every hyperscaler, every cloud provider racing to train and deploy large language models needed Nvidia's H100 and A100 chips. The demand was so ferocious that customers were waiting months just to get their hands on these processors. That scarcity created a pricing environment that sent Nvidia's revenue and margins into the stratosphere, with the company reporting triple-digit revenue growth that left Wall Street speechless quarter after quarter. But here's where the story gets complicated. The market is now asking a question it hasn't had to ask seriously in over 2 years: what happens to Nvidia's jaw-dropping valuation if the AI spending boom starts showing signs of fatigue? OpenAI's growth concerns are not just a company-specific story. They represent something bigger: a potential inflection point in how aggressively enterprises and AI labs are willing to keep spending on the computational infrastructure that powers these systems. Nvidia currently trades at a valuation that demands near perfection. We're talking about a price-to-earnings multiple that reflects expectations of continued explosive growth. For that multiple to hold up, the company needs its biggest customers to keep ordering chips at breakneck speed. Any hint that those orders might slow, that data center build-outs might pause, or that AI companies are optimizing efficiency over raw compute power, and suddenly that premium valuation looks a lot harder to justify. The bears are pointing to something very specific here. If OpenAI and companies like it begin focusing more on inference, running existing AI models rather than the massively compute-hungry process of training new ones, the demand dynamics for cutting-edge Nvidia chips could shift meaningfully. Training requires enormous clusters of GPUs running constantly. Inference is considerably less intensive. That distinction matters enormously for Nvidia's forward revenue projections. The bulls, however, are not backing down without a fight. They argue that Nvidia's competitive moat through its CUDA software ecosystem remains virtually unassailable. They point to sovereign AI spending, military AI applications, robotics, and the next generation of AI agents as demand drivers that haven't even fully materialized yet. They say Nvidia isn't just selling chips, it's selling the entire infrastructure stack that the AI economy runs on, and that story is nowhere near finished. Analysts are now furiously recalibrating their models, running scenarios where AI capex growth moderates from explosive to merely strong, and asking whether Nvidia's stock has priced in a level of perfection that leaves virtually no margin for error. The pressure on AI chip stocks across the board, AMD, Broadcom, and others feeling the ripple effect, signals that this isn't just a one-day panic. This is a genuine reassessment happening in real time. The fundamental question every investor must now answer is this: are we watching a brief storm of uncertainty before the AI spending supercycle roars back to life? Or has the market finally found the crack in Nvidia's armor that reality was always going to deliver?